Another week behind us where it was geopolitical tensions and risks rather than economics driving the markets. We'll have a quick look at the highlights and explore our housing market in a bit more detail after the recent comments from Standard & Poor's. Local data has again been slightly better than expected, including our unemployment rate falling to 5.7%, with another 37,000 increase in net jobs created across Australia, matching some of the survey leading indicators, even though jobs are still mainly part-time rather than full-time, meaning the average hours worked has fallen again. But during the week, Standard & Poor's surprised the market by highlighting their opinion of risks in Australia's housing market and downgraded their rating of a range of banks as a result, which was a strange decision given the housing market does appear to have cooled a little, and their statement did predict a soft landing for the housing market as the cycle plays out, which is also our view in the absence of sharply higher interest rates, which don't appear likely in the short term at all. Inflation remains benign and wages growth is almost non-existent. So while inflation is expected to modestly increase, only a sharp outbreak would force the RBA to aggressively hike official interest rates. The influences from overseas are still mainly from the world's two largest economies, the USA and China. And while the US market seems unfazed by impeachment talk for President Trump, the Chinese outlook is a source of great debate. The official growth rate is encouraging, but other indicators and independent assessments are less convincing. And another ratings agency, Moody's, has just downgraded China's sovereign credit rating. Nevertheless, we do expect the authorities there to still achieve their own soft landing, much like our housing market. And finally, on foreign exchange markets, the Aussie dollar is steady against the US greenback, but losing ground against the euro. The stability of the European Union has been helped by the recent elections. Poor timing if you've booked a holiday for the European summer. But the currency you would like to have right now is Bitcoin. One Bitcoin is now worth around 4,000 Australian dollars. 5 years ago, they were trading at $10. So check your digital wallet for any spare change. And that's the market update from Bendigo Bank.